Hi, everybody. This is Tandra Bowers with the Home Experts for You team of Keller Williams. So I am super excited today to have Megan Munley with Fairway Independent Mortgage on to talk with us today. So you're going to want to listen up because everyone has been wondering what is going to happen with our mortgage rates this year. We've seen some changes and influx in the last 2 weeks. And I think now more than ever, we need to hear from Megan, one of our trusted mortgage advisors. She's got some great insight to share with us today. Constantly having these discussions with buyers and even sellers to find out how is this going to impact the sale of their homes if we should see some changes in the mortgage rates, whether if they increase. We were talking about this topic about a year ago. Actually, we did this video 2 years ago. We were right on the money when we were talking about what your projections were for 2019. Last year, we didn't obviously meet because we were all, dealing with pandemic, but it's good to talk about this on an annual basis and see how the rates will impact our mortgage as well as the real estate market in general. So why don't you tell us what you predict for 2021?
You got it, Tandra. So, it's really important to note that today, when we're recording this video, it's March 2nd, right?
Yeah.
What's really important to remember about this date is that this very day last year in 2020 is the first day that we saw rates dip to lows that we had never seen before. It was this very day where phones started ringing off the hook in terms of, can I lock in my interest rate under 3% for a mortgage? Can I refinance my mortgage? And it created a tailspin, right?
Yeah.
So we saw that in 2020, that created so much more demand for buying homes on top of what we already had. And so it's interesting to really note that this past year has been such a tumultuous year in terms of what we've seen personally going on, but also within that mortgage rate market. There has been so much volatility pushing these rates lower and lower, really because we've been dealing with a very sick economy. What we're starting to see now is with the change in office, with our presidential election that came into play, and with everything that's coming into that change in power, the stimulus plans that keep getting influxed into our economy are really starting to impact what's going on within the bond market. We've seen the stock markets jumping higher and higher, and we've seen times where it's actually gone really low within the past 12 months. But it's really key to note that these last 2.5 weeks alone, there was a number that came out, which is the consumer spending index. It's that core index where it really gives us an idea of inflation. The Fed really relies on this number to give us an idea of how the economy is performing. And so that number was expected to be much, much lower than what that number actually came out to be. And it was mainly because of this influx within the last round of stimulus checks. Just now on Friday, this past Friday, we had the latest plan approved for that additional 1.9 billion to be influxed into the economy. And so what's happening is as we get this additional money that's going into the economy, rather than seeing that be built into savings, we're seeing that that's immediately going into spending. So that consumer spending index is really key to give us an idea of how the economy is recovering. And as we're starting to see those numbers increase, that's going to rise inflation. And so as inflation is starting to increase, that is the arch enemy of mortgage interest rates. So as inflation increases, you can bet your bottom dollar that mortgage rates are going to increase in it as well. Okay. And it's something that we've talked about a lot in terms of forecasting. There's Moody's forecasting that came out that said in 2020, we're really going to see interest rates probably somewhere within the mid threes, about 3.5%. And also the Mortgage Bankers Association, they came out and said roughly about the same. And we'll share some charts with you so you can include it as well. But these rates are expected that they're probably going to be climbing into the mid threes this year. That should be the average that we'll see for 2021. And then as we get into 2022, we're probably going to see those climb into the mid fours. So it's something that's really going to drive demand, I think, not only for buyers that are looking to purchase, whether it's a first or a new home, but also a lot of sellers as well. Because if you're considering to maybe move up or even looking to downsize, you're looking at the opportunity that you have right now within that market. And a lot of people are concerned, hey, what happens if this rate actually changes, right? So you and I were talking about this, Tandra, and we said, Well, really, if we're looking at changes in interest rates, if we look at something for 500,000, for example, as our loan amount, every eighth
Yeah.
of a difference in an interest rate is only going to be about $33 a month. So long term, if we're
Mhm.
looking out over 10 years, that's really only a difference of 3,900 over 10 years.
That's nothing, right? Over 10 years.
But when they start to increase higher than that, that's where that number really impacts, right? So if
Mhm.
we look at something going from maybe 2.75, which was available just a few weeks ago, up
Mhm.
to an interest rate of 3.75%, the difference there is going to be about $275 a month. And so while that monthly numbers is pretty drastic, long term, if you look at that over 10 years, that's about 33,000. So
Wow.
that gives us a really good marker of just how important it is to keep an eye on the rates. Listen, historically, we are still at the lowest we
Yeah,
have ever seen. There are
absolutely.
countries in the world where a fixed mortgage interest rate is up at 6 and 8%. So we are still in an economy, we're still in a country that really fosters the ability to finance a home at very low rates, where inflation is basically covering that cost. And it's allowing people to be able to afford what they need in a home.
Right.
It's just a matter of keeping that in mind. If you're making your plan to do something, maybe within the next 12 months, 24 months, really think about how that can impact it. So if a lower rate is something that's super important to you, it's something that we've really got to take advantage of now while the
Mhm.
market is still at these lows.
Mhm. And even for, a seller, there's more buyers when the rates are lower. When the rates climb, you're still going to always have buyers that want to buy houses. It's just that number will decrease because the number of people that may be able to afford a house, they may now be in a different bracket of affordability when
That's
those
key.
rates go down. So now, as I've been telling anybody that I talk to, if you're looking to sell within the next 5 years, let's just have a conversation, because maybe it makes sense now, maybe it doesn't, but it at least gives a good forecast of what is a good plan for them now or into the future. Same thing with buyers. They want to take advantage of the mortgage rates right now, but if they're not ready, like, does it make sense to wait next year? I don't know.
Right. And it's just important to consider that, right? I think one of the biggest things that we're looking at right now, especially when we're qualifying buyers, whether they're looking to sell and purchase a new home, it's amazing to see how much equity is there in the market. And
Yeah.
no, we are not in a bubble. Can we just speak on that for a second? Because
Thank
I
you.
don't know how many times we get this question per
Mhm.
day. I'm sure you get it way more than I do.
Mhm.
But everyone is questioning, oh my God, well, these rates for homes, the prices on the homes have just increased so drastically. That's because there is so much more demand than there is for homes available right now.
Mhm.
So the biggest issue that we're going to see is that that's going to continue to grow. What happens when we have things like a shutdown, the pandemic? Well, it actually kind of creates a lot of births. And so we're going to see a lot of that tick up in the next 12 months even still.
Yep.
So that's
Yep.
something that's going to be really driving more families to need to purchase a home to fit their family size, right?
Right.
We've
That's absolutely
also
true.
gone
Mhm.
into a completely different category now where so many people can work from home that have never been able to work from home before.
Mhm.
So they
Mhm.
need the space, they need the extra room so that they can have their home office, so that they can work alongside their families and
Mhm.
still be able to feel comfortable.
Yep.
So that's really, really key. That's something that's going to continue to create that demand.
Mhm.
No, there is not a bubble that's in play right now, because unless that demand was falsely created, which in this case it's not, we don't have enough new housing started to really taper that off until we
Mhm.
start to see new housing, which is going to be years away from really capturing what it needs to do within the market. There
Mhm.
is not going to be an issue where we see this bubble. So
Right.
right now, when we see the amount of equity that people have in their homes, it's incredible what we can do in terms of putting money down for the next house, but also paying off some consumer and revolving debt that they might have, even if
Mhm.
it's student loans or even car loans. It's amazing to see the net savings that we can do between an existing mortgage payment, a new home payment, and then also paying off any of those additional debts as well. It's incredible what this market can do.
I have a question for you. How many of the conversations are you having with people that are saying, oh, I think I might want to refi. And how many of those conversations are turning into, you know what, I may want to sell now. Are you seeing that more often?
So common, so common.
Mhm.
And so people are still taking advantage of that ability to refinance now to create that savings. But what we've also been able to do is tap into that equity. Maybe you don't have that savings available to you in your bank account right now. But what if we're able to tap into that current equity, do that refinance, save you money on a monthly payment, take some cash out that's available to you? Now that money's just sitting there ready. So if you find a new house, wonderful, you can jump on it. You might even be able to do it non-contingent on the sale of your current home, which is key right now in this market with anybody that's really up in a competitive range. And so that's been really important to just showcase that ability. If you even were to take something like that cash out where you thought maybe I'll use it to purchase, and you decide still that, okay, I'm not going to end up doing that. There's always options later where you can recast that mortgage, take that additional lump sum, put it towards your principal, and still pay it down and lower that monthly payment. But it's just a great opportunity where a lot of people are talking about refinancing. What else can I be doing? Or should I really be looking at this equity? They don't realize how much equity is really sitting in their home and what they can do to capitalize on it. Because many are considering right now, should I make this home work for me? Or should I look for something else? And I think right now, especially with the demand of home renovations, that cost is increasing quite drastically. So if you can buy a home that has it done, you're actually going to end up saving a little bit of money long term.
Yeah, the cost of, we renovate houses and the cost of our renovations have increased just because the product demand is there, and the supplies are more expensive. Yeah.
Yeah. I mean,
Very
just
true.
lumber alone, getting
Yes.
anything right now is still it's still very impacted. And I think that's going to continue for a couple months, if not even a few years, just because supply chain management has really been broken in terms of anything that has to do with production and lines, any type of lines for production of products, whether it's wood, whether it's appliances, which are taking months for back orders.
Yeah,
right?
furniture.
Oh my goodness.
Everything. Mm-hmm. Yeah, we take a lot of that in years past for granted. We haven't really seen this, type of issue before. So you're absolutely right. So if someone wants to get in touch with you, how would they get in touch with you to talk
Best
more
thing
about
to do,
planning?
We've got a website you can go to, meganmunley.com. You can go directly on there. You can always call or text my team as well. So we've got a telephone number, 215-710-0722. And we are always happy to talk through these questions. It doesn't have to be you ready to do anything right now. We are absolutely working with a number of people and families that are considering their move in the next year or 2 years, because we want to make sure that credit is in the best position to do so. And then also just looking at the overall picture. What is your goal long-term with your family? What is your goal for where you want to live? And really just see, is that something that you can capitalize on now while these rates are still incredibly low and before we start to see that increase uptick?
Yep. That's why I love, working with you, Meg. You're really helping to make the plan for the person, not fit a plan for somebody else. You really customize it and learn what they need. So it's good to have you.
You've got to make your numbers work for you.
Always talk the numbers first before you make any quick decisions. That's what we always do. Yep. So if you want further information, please feel free to reach out to Megan or obviously myself. I'd be happy to talk with you. Thanks so much for tuning in. You can check us out on the web at suburblivingblog.com. This is Tandra Bowers with the Home Experts for You team of Keller Williams. Thanks.
This is Megan Munley with Fairway Independent Mortgage Company, your local mortgage lender right here in Conshohocken. I wanted to share with you one of the most important tips when you're looking to purchase a home. Whether it's your first home, your vacation home, a new home, or an investment property, you don't need 20% down to purchase that house. There are mortgage solutions with as little as 3% down, even in the jumbo category, if you're looking to purchase a primary residence. The most important thing that we can look to do is find the solution that is going to fit your goals based on a monthly payment and what you'd like to invest initially in purchasing the home. From there, we can find solutions that may have mortgage insurance non-existent from the beginning, or options that allow you to purchase that mortgage insurance upfront at a fraction of the cost and not have to pay it on a monthly basis. What a great savings that can be. If you or anyone you know has questions about the mortgage and financing process, I would be happy to answer those. Please don't hesitate to reach out.